Do IBD ratings matter when you are looking at selecting stocks for investment or trading? That's the question which is often asked. And we'll have a look at this at a very immediate data point kind of a look. So if you look at the total number of stocks which are traded, and what I've done is basically like taken all the stocks which are US stocks, ETFs, and American depository receipts and put it into one list which is universe. And on this universe, I'm looking at stocks with liquidity. So liquidity is about 100,000 and price is about 1. So if you look at that, you have 3,157 stocks today trading in the market which have enough of liquidity in terms of they have a liquidity of 100,000. So those are fairly liquid stocks, and which are the kind of stocks which one looks for trading or investment. Now, this particular set of stocks, what I've done is I have sorted it by YTD, which is basically what it tells you is the first trading day of this year till today. How much has this stock made a move? So this is a stock which is the number one ranked stock, if you see, because of this buyout, and this is number 2, and this is number 3, number 4, like that. So if we look at the top 100 stocks and by YTD returns, because these are the kind of stocks as an investor or a trader you want to be in, and then if you find that like say 60% of them or 70 or 80% of them or 50% or 40% of them have a IBD ratings above, say, what is the prescribed IBD rating, then you will spend your time and money on looking at IBD rating. But if you find that only a small handful of stocks out of the top 100 stocks or 200 stocks are meeting the IBD condition, or like what IBD model prescribes as the condition to look for in a stock, which is typically IBD rating should be above 85, for the EPS rating, and the relative strength rating should be above 85, and the stock should be within 15% of its 52-week high. So if you use that as a criteria, and using MarketSmith, which is the IBD database which costs you around $1,000–1,200 per year, if you run a scan looking for stocks which are EPS rating above 85 and RS rating above 85, so relative strength rating, this is the earnings ratings or the EPS earnings per share ratings, and price above 5 I've taken, but that's not an important criteria, and they are within 25% of high. Instead of 15, I've taken 25%, so you get 149 stocks. So now once you have these 149 stocks, if IBD rating mattered and IBD rating was the factor which was driving, so here there are these 149 stocks, what you will find is that these 149 stocks should be dominating the list of stocks which have made the biggest move this year. So let's see if that is true. So let's flag all these symbols in the list, and once we flag this symbol and once we go back to our universe to look at how many of them show up in the top 16, this is number 16. If you see, there is one stock which is there in the 16th. The next stock is the one which is number 32. Now if you look at there is 138, CTRL, which is 46. So you can see that if you take the top 50 stocks, you will see that out of the top 50 stocks, only 4 stocks have an IBD rating about 84, or EPS rating about 84, and relative strength about 84. So what it tells you is that less than 10% of the stocks had IBD rating. So if you select stocks based on IBD rating, you will be missing out on 90% of the stocks in the market which makes big moves. So it depends really is what is your objective. Is your objective to find the largest the stock which make the biggest move, or to be a cult follower and follow something which is like widely followed by many people in the market, which is like IBD ratings? And a lot of time you hear things like, oh, the IBD 50 is outperforming the market. Based on what methodology and based on what objective facts? Most of the time, those objective facts are basically not stated clearly, and that is what you will find. Now, if you say, okay, 50 is too small a sample, let's look at say 100. And if you go to say 100, so what I'm going to do is say we go to 100 Here this is like 105, this is like 103, and this is 100. Like say any stocks above this is ranked in top 100 by YTD percentage change, or those are the stocks, 100 stocks which made the biggest move. So let's unflag everything below this, which includes this one. So let's look at, like say this is the 100 race is the 100 stock, and which is in the IBD 84 rating or 85 rating. And if you look at it, like out of these 100, how many were with IBD rating? You'll find that there are 13 stocks which had an IBD rating above the prescribed IBD rating. So what it tells you is that 87% of the stocks which made the biggest move this year were not really the stocks which had the ideal kind of growth characteristics, or the kind of things which people have been brainwashed into believing should be looking at into stocks. So like almost on a weekly basis, I get a question from people, either members or people who read the public blogs, saying, look, what do you think of IBD, or what do you... the answer really is, look at the data, and based on the data, do your thinking, rather than basically do it based on what you read in the book and what somebody tells you, because this is objective data. This is what really has happened. You have only 13 stocks which are, as of date, in the last 9 months, have made the biggest move out of the top 100 stocks. So if you select stocks based on that, you're going to be finding only 13% of the stocks. So what is the better way to find stocks which are likely to make a better move, or like how can I find stocks which make bigger moves? The answer is very simple. The answer is select stock based on relative strength or momentum, rather than based on the IBD ratings of EPS and other things. And you don't need to have spent $1,200 to find that kind of ratings. You can find those kind of stocks on your own using any software by ranking stocks using momentum. So that's the easiest way to do it. So coming back to that particular question of should you be spending time on IBD stocks, IBD 50 stocks, or whichever stocks, the answer clearly based on data is no. The answer is that the top performing stocks doesn't necessarily have, or only 13% of the top in the last 1 year or like 9 months had this kind of rating. And you can do this study for several time periods going back into last 10 years, 12 years, 15 years, 20 years, and you'll find the answer remains the same. So in order to like really answer this question, do I need IBD ratings matter? They don't matter if you're looking for the stocks which are making the biggest moves in the market.